Hey guys, welcome to Stock Talk on June 18th. It's currently 4:13 p.m. Eastern Time. Thank you for joining me once again in today's Stock Talk, as well as the live stream earlier today. So as the markets were moving, we're doing some analysis on the markets. So hopefully that helped. Let's get to it right away. Thank you for all of your subscribes and comments. That was amazing. Okay, SPY, 180-day, tracking the S&P 500 on the 180-day chart. So we saw that we know that there's a resistance at 279.50, very close to the light blue line, which was where we put the resistance earlier. So we know that there was a resistance. All of a sudden, we're coming back down. But we said that where's the support? The support is at 274.50 to 275.50. What is our trading strategy? Our trading strategy for today and the next few days is whenever it falls into this boxed area, we're looking for a reversal area, number one, and this is the entry point into the markets, number two. Those are very great entry points because we've been on a bull flag pattern. Pull, consolidation, pull. Now we're going down for a consolidation. That is no problem. Note that the orange line or the 150 SMA has been functioning as a support in the past. So surely we can still drop to the 150 SMA to the box area. This is the time where we would look for that reversal. Of course, right now, are we at a reversal yet? One can argue that, today it might have been looked like a reversal, but seriously, we're still on the downtrend. Look how we in the past few days got rejected the 20 EMA. Here we're back at the 20 EMA. Sure, it can pop right up. Sure, this could have been the reversal, but it can certainly keep coming down because the general area is still arching downwards. So if it starts reversing tomorrow, no problem, we can get into position then. But at the same time, if it starts dipping, this is the prime area to get into the markets because that is a great support area as seen on the 180-day chart, right? And the 2-year chart, this is the this has actively functioned as a resistance in the past and now should function as a very strong support. Looking at TVIX or volatility, what did we see today? Not much change, right? Pretty much the markets are seeing what we're seeing right now. Markets know that that was a very healthy correction that we're having in the past few days. We've had a series of days of uptrends and all of a sudden we're falling. Dow Jones fell over 100 points. However, volatility, what happened? It continued falling. So what does that mean? Markets think we're still in a bullish state, and in fact we should be in a bullish state given that we reversed from bearish to bullish, and here we go, right? Here's volatility constantly getting rejected the 20 EMA. Not something that I would actively play right now, of course, given our current state. So here's TVIX, pretty much the same thing. We're looking for lower prices to come for volatility. For 4/CL crude oil futures, we're looking at the 180-day chart. I've readjusted this higher, this slanted diagonal slanted line because I adjusted a little bit higher because we can see that it's acting as resistance here, and one can almost argue what's the pattern. This is a bear flag pattern, right? Bear flag, consolidation, bear. However, we did see a kind of a big recovery today, 1.23%. Okay, so you might be asking, well, is this a reversal of crude oil? Not definitive enough. It's really not definitive enough in my opinion because our resistance right now is 66.66. That's the area where we can expect some massive resistance on the 180-day chart. So the question is, looking at the 1-year chart, what exactly happened today? You can see, right? We had a massive down candle on Friday, a small pullback on today. This is not a very good sign because as we arch higher, we weren't able to match the previous candle, its magnitude, showing that we didn't have enough energy or power to start reversing back up for crude oil. So right now, crude oil still appears to be on the downtrend despite today's, kind of a slight recovery. So I want to show you guys a couple of tickers though. GUSH is pointing to a slightly different story, I think. Here's GUSH or GUSH, which follows kind of crude oil and exploration. So here we go. Here's a bull flag, right? And then this could be a bull flag followed by consolidation pattern. Note one can also say that this is a bear flag followed by a consolidation pattern. It's just that what you look at, but certainly for today you can see that the candle kind of actually matched the previous Friday's day candle. This should be a pretty good sign in terms of at least reversal to where we know that $40 has been actively acted as a resistance. So $39 to $40 would be a good time to sell it in my opinion. I think there's still potential for GUSH to continue on higher a little bit before it comes back down again. So be on the lookout for GUSH. It went up 6.7% today. And looking at intraday, you guys can see that it popped over $37 at one point, right? So just be on the lookout for that one, as crude oil at the very least is doing some sort of small bounce back to its resistance. 4/NG tracking natural gas futures. All right, this one is certainly really interesting nowadays because we know that natural gas has been very bullish, higher highs plus higher lows, almost in a bull flag pattern, right? Here we go, followed by consolidation, and we had a surge up over the resistance. However, today we got caught and went down 2.05%. So seriously, in this case, what would have happened? So what are our trading strategies? So one can argue that in the most recent case we have a higher low pattern, so we're pretty much at the support. So you could dip your feet in right now, but we had a massive rejection candle right here, and this is I'm more inclined to actually wait and see on this one since we had a failed breakout. I don't really want to participate in both DGAZ or UGAZ. Of course, UGAZ follows natural gas until we find some sort of definitive support. I would still like to go into UGAZ, but it just right now, given today's rejection of the breakout, I do not want to actively participate in this one. UGAZ, you're seeing the similar thing. 68.90 was a resistance. We had a breakout followed by a failed breakout, and now we're below the resistance line. If you want to dip in your feet, I think it's okay, but make sure you're able to. This is one that you have to be able to be flexible in, which you're able to be sacrificing around 8 percentage points. So it's up to you if you want to do that one. All right, 4/GC following gold futures. Gold futures, we know that there's a support at 1269, right? This actively acted as support in the past. We talked about how this support in the past was not very definitive, and we fell below that quite easily. So this should be acting as a resistance at least, 1287. I'm going to remove a couple of other lines just to get rid of some of this. But you can see that this is going to be the resistance, 1287. So there's a little more downside for gold to come, in my opinion. All right, let's take a look at a couple of your tickets. But before we do that, let's take a look at Tesla. Once again, we always revisit Tesla because this is the big money maker, in my opinion, that is occurring, as well as AMD. But AMD is broken out quite a bit, and it's still breaking out. Tesla is just now emerging. You can see that Tesla has a bull flag, right? Pull, consolidation flag on the 3-year chart. We consolidated for a period of a year, okay? So which means that once it starts breaking, in my opinion, it has huge potential. So it's already at 370.83. That this one I can see $400 and $450 for Tesla. So just be on the lookout for that. The one reason I'm referencing Tesla and looking at AMD is because look at AMD, bull flag pattern, emerged as the bull flag with a what percentage gain? Over 30%, right? And this was a consolidation period over a year. Look at the similarity between that and Tesla. Okay, so if anything, this is the one to be watching and actively participating in. Of course, we'll talk about PAYC in the future in future content videos. We talked about PAYC in the past, so there's PAYC. You guys, if you guys are in it, you guys are making a good chunk of profit right now. So, Addy boy, hi Kevin. In the context of a bull flag, what is the time frame you look for? 180-day, 1 year, 3 year, 5 years. I see some stocks in the 10-year range forming a bull flag. So yeah, so those questions, definitely we'll tackle them as well in the course in terms of what to look out for a bull flag and what time span. But right now we are looking at the 3-year time span for Tesla, right? And this is where we see the emergence of a bull flag. So in terms of the time span, we're looking at a weekly candle open and close, and therefore we should be trading on a weekly basis, right? We shouldn't be trading on a daily basis if we are looking at a weekly candles. This pattern certainly shows a more bull flag, and this is the chart that I kind of like to go off of. Certainly if you're seeing it at a different time span, then you just have to be able to kind of take whatever time span and take that with a grain of salt given what the data that you've been given, a shorter span or a longer span. Bugliarello, hi Kevin, could you please look at IP? Have a great day, Tish. So I think that's your name, Tish. So if that's your name, thank you for submitting your ticker. Let's take a look at IP really quickly. Here's IP on the 3-year chart. I actually marked this in earlier. You can see that there's a resistance right here, clearly defined resistance at 58.21. I like this trend in the past. However, look what happened. This was the 50 SMA, right? The blue line. Support, broke the support. Okay, broke the support, kind of recaptured back up, but I found support at the 200 SMA right here, did a double bottom. But what happened last week? Something very critical happened. We had a massive rejection candle at the resistance. This, I can almost argue, is going to be going down in the near future than going up. So just be on the cautious front. This is not something I would actively invest in, as this looks like it will continue to fall more. So, yep, that's it for this one. Tango, morning, Kevin. Hello, morning. Please help us with LRCX. So here we are. See, here's LRCX. Yeah, you see this massive drop, right? We talked about how this bull flag, right? But we're still forming the flag. Or in terms of the 180-day chart, what is exactly happening? Even though we're forming the chart, this boxed area represents potential areas to buy in. But last time we talked about LRCX, we said what? We said that the definitive support would be a double bottom, something like this, or a very big reversal candle like this. We had no double bottom. You can see how we got rejected the 20 EMA, and now it's heading downwards. So at this point, we know that the flag pattern can be slanting downwards, and that's what's happening right now. And we know that what? We can still dip below to 168, possibly even lower, until we see a reversal area or a what? Or a double bottom. Right now, clearly it's on the decline. This is something that we have to wait and see and not actively participate. But of course, as it goes lower and lower, it should pique your interest more and more. Okay, so Dawei, hi Kevin, thanks for replying to my message. Another question, what do you think of the stock ACAD? Seems to be a reversible pattern, so let's take a look at ACAD. So ACAD on the 3-year chart, certainly not something that we would actively involve ourselves with, right? This is almost like a bear flag pattern, coming down, consolidation, coming down, right? We're still on the downtrend. This is not something that we would actively invest in. Looking at the 1-year chart, this is just really scary how fast I can lose my money here, especially now that's going down. Sure, we're at near the 180-day low or with a 1-year low, but certainly this is on a downtrend, and it can certainly continue to fall as we move forward. Addy Boy, nice video. Can you please, Addy Boy? Okay, so okay, INTC fundamentals are good. All right, let's take a look at INTC really quick, and then this will be the last one I'll take a look at today. So INTC, what actually we see is right now we see a gap down you can see that from the daily chart, we gapped down 3.43% today. Again, this is not something that is very nice. Look how when we started gapping down, how many more candles followed? Several more candles followed after the gap down areas, right? So even when we start consolidation, we can still continue to fall. So this is really scary and not something I would actively involve myself with until we find some sort of definitive support. Right now, I think it'll fall a little more than this. You can see that we've fallen below the 50 SMA, and certainly it can fall near the middle. So where could I see potential areas of reversal? Probably around $51, $50, around that area, before considering to buy into this one. I like the trend, of course. It's going high. It's just right now, yeah, $51, $52 could be a good entry point. Look at the 3-year chart; it looks much more promising. But I just realized that this was a gap down area, and that's a little more dangerous. So this Intel. Okay, Intel. All right, so that's it for today. Thank you everyone for watching these videos. Thank you for liking, subscribing if you find these videos helpful. And of course, the course is under development. I'm still developing it and just making the content the best quality possible. It's all about trading habits, managing risk, managing market psychology, managing your emotions, finding great entry and exit points. It's all about those things. So hopefully you'll find it helpful in the future, and I'll see you guys Tuesday for another Stock Talk. Thank you once again.